Unlike most finance channels, I actually show transparency every month on this channel. I show the good times and I show the bad times. And February was a historical month for my portfolio, but not for the good reasons. This month I had 2 dividend cuts in my portfolio and sold out of positions at huge losses. If you're new to the channel, I do these videos every month to show the progress that I've made, what I've learned in the last month, my buys, sells, dividends received, and so much more. And if you hate YouTubers that aren't transparent and don't show their losses like Jeremy LaFraud, it would mean a lot if you could subscribe if you do appreciate the transparency. With all that out of the way, smack that like button for the YouTube algorithm, and of course, roll the intro.
Hello, I like money.
Currently, our portfolio value this month is sitting right above $17,000. We're down a little bit from last month, but it's nothing to write home about. For most of February, we were down, and I was back in the $16,000 mark, but recently, this week, we've had a good little bull run. Portfolio valuation's nothing I like to really celebrate about, but it is cool that we hit $17,000 last month. Regardless of the dividend cuts that happened to me this month, February is actually a pretty good month for, making our portfolio better overall. To start off, we saw some slight growth in our yearly estimated income going from $442 to $445.68. Our portfolio yield went up 0.3%, and this month I reduced the amount of stocks I own from 30 to 28, and currently 25 of my 28 positions pay dividend. Overall, I think we're really spreading our income from month to month, and you guys will see that in the coming year. Overall, I don't know where we'll be at for the end of the year with my estimated annual income for dividends. As I've mentioned in previous videos, right now I'm really aiming for dividend growth and less dividend yield. I'm looking for companies with amazing financials, brand value, moat, etc. And speaking of dividend growth, here are the companies that increased their dividends for me in my portfolio this month. To start the month off, Coke increased their dividend 4.5%. I was honestly not really expecting this as their current payout ratio is a little high, but honestly I was very impressed and I'm very happy that Coke could increase their dividend by this much. Warren Buffett's got to be very happy about that one. Next, we have 3M that increased their dividend 0.6%. A lot of people are speculating that 3M will cut their dividend due to the lawsuits, but there's actually some recent good news based on the lawsuits that people aren't going deaf because of it. So right now, for me, all signs are showing that 3M will not be cutting their dividend, and I'm happy to at least see some growth from it. I'm not buying any more at these low prices, but I am reinvesting my dividends to get my cost basis down. Next, we have an underrated stock in my opinion, which is UPS, and they hiked their dividend 6.6%. UPS's board and management has continuously rewarded their shareholders, and it's definitely a stock that I'm going to be looking to add to in the future. UPS also performs share buybacks, which is awesome to see. Next, we have the trash company, Waste Management, and they hiked their dividend 7.7%. As I keep mentioning, guys, this is a stock that was one of my first stocks ever that I bought. I have just straight up not bought anymore. They're a recession-proof company. I will definitely looking to add some this summer when my income is higher. But the valuation for Waste Management right now, it's very high PE ratio, and I'd rather invest in higher growth companies like Microsoft and Visa. I definitely do think this is a high quality stock that I need to add to in my future. But again, the valuation has just held me back. And lastly for me, Pepsi hiked their dividend 10%. Again, I do question the sustainability of these dividend hikes, but Pepsi I think is definitely more sustainable than Coke. Very happy with Pepsi right now, and I don't own a ton. I only own about $350 worth. But the valuation right now, they're trading at the same valuations, Coke and Pepsi, as companies like Microsoft and Visa and Apple. And while I think that they're amazing companies, do they deserve to be trading at these valuations? That's the question at the end of the day. And with my limited capital, I'm not willing to buy anymore. With that said, I do love Pepsi, and I definitely will be looking to add any if they dip. Now, onto my buys and sells for the month of February, and this is what you all came for. To start off, I bought 2 shares of Kroger at $44.35. Kroger is a very high quality company that I've been looking to build up in my portfolio recently. They're very strong financially and are acquiring and merging with Albertsons, which is only going to broaden them. If I'm being completely honest here as a shareholder, Kroger is kind of turning into a monopoly, but that's what I want. Ideally, you want strong companies like this with monopolistic features in your portfolio. I'm going to be dollar cost averaging in a Kroger this summer when I get more income for sure. Next, I sold my 2 shares of VF Corp at $28.55, selling out at a 55% loss. To start off, it was one of the first stocks that I ever bought, and I took advice from a family member, which is what you should never do. VF Corp is a group of clothing chains which own okay brands. And when I mean okay brands, I'm talking about like Timberland, Dickies Jeans, North Face, and of other plethora of brands. If I'm being honest, I don't think VF Corp is the best of the best clothing companies, and in my portfolio, I want the best of the best companies in their own respected sectors. I probably should have just went with Nike here and bought that because they have much higher dividend growth and much more better brand value and pricing power in my opinion. With this money from VF Corp, I bought one share of Kroger at $44.20 and one share of Vici at $34.70. I didn't mention this earlier, but Kroger actually just came out with earnings, and they were very good, higher than expected profit margins, which is very important for them. Next, I bought one share of Union Pacific at $201.90. UNP actually just announced that they would be removing their CEO Lance Fritz from his position after 22 years. Basically, a fund called Union Pacific out and Lance Fritz out based on his poor performance with the assets that he had in Union Pacific. It called for a former COO to come back and replace Fritz as the CEO. Overall, I'm bullish on Union Pacific based on the previous performance, and I think it's amazing that there's so much more potential with them. I'm looking forward to see what Union Pacific does with the new CEO, and this is definitely a position that I want to build up in my portfolio. Next, I bought one share of SCHD at $75.70. Can't go wrong there. And now, here's the big one. I sold all my 5 shares of Intel at a 40% loss. So why did I sell? Well, if you really want to know, you could watch my video from last week. The link is in the description. I go very in-depth on it. But to sum it up very quickly, I made a mistake in my investing process and picking out the stock in the first place. There's massive capital expenditures required for semiconductors and Intel specifically. 2, I wasn't too happy with the way Pat Gelsinger kind of lied about the dividend and saying that it was a competitive dividend literally a month before they cut it. And 3, I'm done investing in comeback and turnaround stocks, and I want the highest quality positions in my portfolio possible. Lastly, I used my money to buy one share of Visa at $219.17. I lost a little over $100 on my Intel investment, which in the grand scheme of things will not be anything at all. But I thought to myself, where can I make this money back? And I immediately went to Visa. Visa, I think, is currently trading at fair value, and I need to build it up in my portfolio, and I want to have it be a core position. Over the long run, I want to see my Visa position compound with all these giant dividend hikes that they have. I understand Visa's business model very well compared to Intel as well and other companies in my portfolio. And if in the grand scheme of things, a lot of people are saying that you should have waited till, under $200 or till it dips again. But I simply don't want to wait out on compounding to happen with Visa right now. I'll of course continue to add to it on dips, but I do want this position to start compounding now and let the dividend snowball get rolling. Now that segment is over, you don't think it could get any possibly better, do you? But of course not. The fun never stops here. Let's go over my dividends for the month of February. To start the month off, we got our last ever dividend payment from AT&T, which makes me tear up a little bit. We got $3.83 from them. That dividend was not reinvested. Next, we got $2.23 from Hasbro. Hasbro is one of those positions that's down a lot right now, but I think once we get into a bull market again, I will likely be selling out of this position. Next, we got $3.38 from Realty Income. It's pretty cool to see when I'm not adding to my Realty Income position. Still, my payments are growing month after month with the compounding. Next, we got a pretty juicy dividend payment from AbbVie. We got $9.32 from them. AbbVie is an amazing company, and they just reported good earnings. Next, we got our giant dividend payment from Apple, which is $2.09. Happy to see that payment. I love Apple, but I would like to see some better dividend growth from them. And lastly, we got a juicy dividend payment from Starbucks, and we got $7.08 from them. Starbucks is probably one of my favorite companies that I own in the portfolio right now. It's a company I understand very well, and I love the brand value that they have right now, and I'm happy to see my dividends keep growing with them. Now, I want to talk about the lesson that I learned this month. The big lesson that I learned is stop investing in turnaround and bounce back stock. If an okay company is cheap, there's likely a big reason for it. In my portfolio, I'm done investing in just okay companies. From now on, I'm only buying amazing companies that are top tier. Another thing I'm learning is how fast the market can drop and go up, and that continues to prove my thesis of why I need to always have capital on the sidelines, and I'm still working on that as well. And that, ladies and gentlemen, is my portfolio update for February. I want to give a big shout out to Fiscal Philanthropy for including me in his video of 3 underrated finance YouTubers to check out. I want to thank you all so much for making it to the end of the video. It really means a lot. If you don't want to wait every month to see my portfolio updates, buys, sells, dividends received, and much more, join the Discord, link in the description to see all my buys, sells, dividends. Thank you again for making it here, and of course, and most importantly, do dividend stocks, not drugs. Have a great one.